Good morning, Trinidad and Tobago, and welcome once again to the Bourse report. Parts of Trinidad and Tobago are rainy, but I'm not here for the weather report. Let me say at the very beginning that the markets have gone into a tailspin over the weekend as a result of the Paris terror situation, which cost the lives of some 129 persons. The markets have been down as I looked on last night to see what's happening coming from Asia onwards. And this is another contributor to the extreme volatility that is taking place in the market. Oil price is one, as Hema mentioned earlier, but this particular situation will cause some shenanigans in the market going forward as we see prices go down, yields go up at the bond side, and the equities market trend downwards. But today I'm going to look at the two stock on the Trinidad and Tobago market, which will be Guardian Holdings, GHL, and Unilever Caribbean Limited, UCL. Both of these stocks give indications that the market has softened, or I should say the economy has softened somewhat as we look forward to whether these are indicators of what is going to happen in the local regional economy. Let's turn now to GHL and what has happened as at the 9-month period ended the 30th of March 2015. What we have seen is a decline in the basic earnings per share of GHL to $1.02, down some 17% when compared to the 9-month period 2014, which was $1.23. In particular, what would have been a factor in these earnings was the decline in terms of fair value of the investment portfolio of Guardian. And that has declined quite considerably, driven by fair value gains, or should I say fair value losses, from 26.9 million in the last period down to a negative 66.2 million in this current period. And I think that you are going to see that across the board, because September was a particularly difficult month for portfolio investors, especially when those investment portfolios are out not only in the local and regional markets, but internationally, where there is a more significant holding. Gross premiums for Guardian fell by 159 million, down 3.5% to $4 billion. When we look at the first graph, let's take a look at what's happening with gross premiums written in the 9 months and what is happening to margins. As I said, gross premiums would have fallen 145 million, down to 3.96 million. It's an indicator of the level of economic activity or the state of the economy in which, or the economies in which Guardian Holdings operate, particularly in Trinidad, Jamaica, and the Dutch Caribbean. Net income from insurance underwriting activities grew 17.6%, but that is because of change in accounting rules as well as legislation in terms of taxes for the Jamaican economy. So that overall, the net income from all activities declined some 2%, or $21.8 million, to a level of $1.06 billion. What's the outlook for Guardian? Well, let's look very quickly. Expectations with the volatility that is taking place into this quarter, one could expect the investment activity side to fall somewhat going forward towards the end of the year. And let's look at the next graph, which shows that GHL's earnings per share and dividend yield over the past 5 years from 2011 onwards. What you can see is dividend yield is high at 4.6% this time around on a trailing earnings of about $1.52. What's the outlook? When we look at the outlook, we see, I mention again, trailing dividend of 4.6 the fall in earnings per share. But notwithstanding these factors, with the price trading at $12.90 and a trailing PE of 8.5 times, the stock is trading at a discount to a market PE of 13.4. And the sector PE, which is the insurance sector, financial services sector, trading at 11.6. What this means is there's headroom for the stock to move upwards, all other things being equal in terms of its premium writing as well as investment activities. So when you compare the stock, it is something to look at, but the factors that surround it suggest that we would hold a neutral rating on Guardian Holdings this time around as we look to achievements at the end of the year. Very quickly now, let us turn to UCL. Again, in the case of UCL, you have a situation where the earnings have fallen. For the 9-month period to September 30th, 2015, UCL recorded a 35.3% drop in its earnings per share to $1.10 from the $1.70 delivered in the comparable period. Again, economic factors have been singled out for the fall in the income across the Caribbean, including, of course, Trinidad and Tobago. Gross profit declined by $18.3 million or 10.7% when compared to the comparable period in 2014. That is, from $150 to $152.8 million from $171 million. Other factors, when you look at the profit after tax, dropped by $15.9 million or 35% from $44.7 million in 2014 to $28.8 million. This is for the 9-month comparative period. Sputtering local and regional economy continued to challenge UCL's performance, and despite this, what we can see is that what we are aware of is that fourth quarter is usually the best quarter for UCL. Look at the next graph, you will see that yellow bar that goes up there. In each of the past 4 years, that bar compared to the 3 previous quarters on each situation shows an increase in earnings in the third quarter over first, second, and third. Our view at the current price of 67.54, Unilever Caribbean is trading at a trailing P multiple of as high as 35.2 times, which is a substantial premium over the 5-year average of 18.9 times and the market PE of 13.4. What this translates to is that the company is trading at its highest PE multiple and not much headroom for growth, but rather we can foresee some sort of decline in that PE multiple as we go forward, all other factors holding. In this context, the stock's trailing dividend yield stands at about 2.44% with a trailing dividend of 1.65. Turn to the next graph very quickly, and what you would see is what I've been saying. If you look at the extreme right, P multiples 35.2, the average for the past 5 years, 20.5, and our outlook is for some sort of decline. On this basis, we have a sell rating now on UCL. Look for more details of this particular report on our website, bourseinvestment.com. Look for us on the Express on page 10 for a shortened form of this particular report. Look for us as well on our pricing and our valuations for our various mutual funds under Save Invest and Bourse. Have yourself a wonderful investment week. This is Subhash Ramkilawan for the Bourse Report.